I'm Michael Cole, and welcome to the first session in Mingtiandi Asia Proptech Forum. Today marks the official release of our report on tech adoption in Asia's real estate sector. We're also proud to welcome guests from Hines and Yardi to share with us their innovation experiences. In a few minutes, I'm going to be sharing with you the key findings of our report, which is based on a survey which we conducted last year of Mingtiandi's readers in the region. Before we go on, however, let me tell you a bit about our guests. Our first guest is Bernie Devine, Regional Director with Yardi, which sponsored the report and the survey. Bernie will be sharing with us his insights, not only from working with us on the study, which is based on an earlier report which we worked together on in 2017, but also from assisting developers and investors in the region in managing their portfolios online. Next in the show, we'll be welcoming Hines Managing Director for Asia Pacific, Claire Cormier-Telke, and her colleague from the Developers Innovation Division, Charlie Kunst. Claire and Charlie will be sharing with us their insights about how innovation is changing the real estate industry, both here in Asia Pacific and worldwide. Before we go on further, let me remind you that next week, on 27 January, we'll be hosting a dedicated session on tech adoption in the logistics real estate sector. In that session, we will be welcoming guests from ESR, Taiwan's Allied Logistics Properties, and more, as we look into how warehouses are being transformed by technology. If you haven't signed up for that show already, please go to mingtiandi.com and register today. Now, let's find out a little bit more about what we discovered in our report. Mingtiandi is proud to welcome you to the official launch of our report, Tech Adoption in Asian Real Estate, The Pandemic Drives Innovation. The report is based on a survey of Mingtiandi's readership of real estate professionals, which we supported further by interviewing industry leaders from around the region, whose companies have been among the most active innovators in the property industry. Both the survey and the report were sponsored by Yardi, a leader in real estate's digital transformation worldwide. While there's been much written about PropTech, real estate tech, and other takes on innovation in real estate, given Mingtiandi's audience of developers, investors, and other industry professionals, our goal in the study was to ask people what they're using now and how this has changed since a previous PropTech study which we conducted in 2017. Of special interest this year is the impact that the COVID-19 pandemic has had on accelerating tech adoption, with many respondents indicating that the public health crisis has driven adoption of new systems. To understand the survey results, it helps to understand the respondents. Of the 180 people who replied to the survey, 43% worked for a consultancy, 21% described their company as a developer, and in total, 30% were in fund management or finance. By seniority, 73% identified as C-suite or director-level executives. By location, Asia Pacific dominated the survey, with 39% of respondents residing in Hong Kong, another 26% in Singapore, and 12% in mainland China. While the largest group of responses came from consulting professionals, 49% of respondents indicated that their company invested in real estate as a core activity. Of those investors, 34% managed at least $1 billion or more in assets, and 10% oversaw at least $50 billion in assets. Now let's talk about the key findings of the report. One of our goals in the survey was to quantify the impact that COVID-19 is having on decisions regarding tech adoption. And 60% of respondents said that the pandemic had already led them to add new systems or enhance use of existing ones. Looking forward, 81% of those answering the survey said that they would be investing in new systems in the future. Among the noteworthy changes since our first study in 2017 was the perception of technology use in Asia versus the West. In our study 3 years ago, some 56% saw Asia trailing the West in terms of tech adoption, with only 35% reporting the same sentiment now. From discussing this finding with industry experts, we found that advancements in mainland China and other locations in the region were rapidly changing how Asian real estate companies use technology. Despite this switch, 77% of respondents still felt that real estate lags other industries in tech adoption. Among the areas where companies are increasing their use of new systems is in collaboration tools. As a measure of basic tech system adoption, 58% of respondents now say they use a CRM system, compared to just 30% in 2017. Looking to the future, our respondents have big expectations for further change in how real estate companies use technology in the region. 55% say that big data would be the innovation they would be most likely to use in the long term, while 42% pointed to AI and 32% voted for the Internet of Things and automation. In our discussions with industry leaders, we also learned about how the growing presence of tech occupiers in the office world is changing how landlords work with their tenants. To learn more about this and about technology in Asia's real estate industry, check out all 65 pages of the report. The report and its findings are now available for download on our website today at mingtiandi.com. Now, let's talk with a few of our industry experts to learn more. All right, and we're back live, and I do want to thank all of you for bearing with us while we had a few technical difficulties there. We will be moving on with our show. Let me remind you also that after we complete our sessions with Bernie Devine from Yardi and Claire Cormier-Telke and Charlie Kunst from Hines, we will be bringing everyone back together for a Q&A session following the end of the show. So let's go live to our talk with Bernie Devine from Yardi. Bernie, are you out there?
Yeah, hi, Michael.
Thanks for joining us here in Hong Kong today.
Yeah, thank you. Nice and chilly here.
All right. Well, it's a little bit warmer in Bangkok, but yeah, we've got people joining us from around the world, so from all angles of this. So Bernie, you worked with us on the 2017 survey, and then again on this survey that we conducted last year. Were you surprised by some of the changes that we saw in terms of the data coming in over that 3-year interval?
Yeah, thanks, Michael. I think, I don't know about surprise, but it was certainly of interest to see some of the changes, and perhaps the change in terms of barriers to progressing or to adopting real estate. Perhaps some of that. The attitudes there and the barriers there has been a little bit interesting or maybe even surprising, because I think 2017 the main barrier that folks saw to adoption of new tech was resistance to change, whereas I think this time round it's definitely been more I guess around resources and being able to find resources with expertise who can help. So that was quite a big change that we saw, and I think very pertinent to what we're seeing across the industry. It is definitely one of the challenges that folks are finding. Beyond that, I think a lot of the other things, I guess, may be surprising, but certainly of note is that the percentage of people who are still using spreadsheets to manage significantly large and complex businesses is still quite large.
In terms of the role of the pandemic in influencing people's decision making, in our survey, we found that 60% of the respondents said that the COVID-19 situation had led them to increase or enhance tech system adoption. Is this something that's happening, you see happening across all industries? Is this play a larger role in real estate? You're working regionally, so maybe you can give us some insights from your work with clients around the region.
Yeah, look, I think I think it's worthwhile highlighting the point of information technology, so business process-based technology, a lot of that sort of stuff, which is really our core business, versus operational technology, so more IoT and those sorts of things, which we're into, but is much more, I guess, attached to the building, and that's certainly an area of focus for us now. And I'd say there's been a couple of things. And first of all, without doubt, every senior executive I've spoken to in real estate has said that they've really increased their focus and investment in technology. And in particular, I guess some key folks who have fairly large portfolios and businesses. One of their comments for a few of them was that, when I asked them, if you'd known in February what you know now, what would have been, the top thing you would have done? And the answer invariably was increased spend in technology earlier, because a lot of them feel like they've now uncovered a lot of things that they really need to do that they were sort of, I guess, under the rug a little, and a real need to clean up a lot of the house, if I can maybe make that analogy. And so yeah, without doubt, there's been a significant increase in investment in technology, both in terms of business process, so information technology, and also in terms of IoT and the buildings. I think the area that's still a little bit of a question mark for a lot of people is, how do I connect the building to the business process?
Well, you say that people want to increase their spending on technology. Well, no one wakes up in the morning and says, "I want to spend more money." Well, I know some people that do, but we're not about running their business. So, what's the problem that you're typically trying to solve?
Yeah, good question. And I think what the survey highlighted was the fact that a lot of people really are seriously still running significant businesses and portfolios on spreadsheets, which are, just a dumb spreadsheet. They're not a connected system that with workflows that makes things flow together and conform with rules and deliver consistent outcomes. Right. So and similarly, spreadsheets are very hard places to get data from because it's disparate, it's all over the place, it's not consistent, lots of challenges. Whereas bringing stuff into a system, really fixes a lot of those issues of getting data consistent, getting it real time, getting it all in one place, etc. So I think when I talked to people over the last 12 months, and it was a theme before COVID, but it's continued now, and that's been very much around wanting to get management dashboards, asset management dashboards, to really understand portfolio performance. That's really been a key driver. And what everyone has discovered as they've burrowed into that space is that they have disparate systems, as I said, spreadsheets, etc. That's a real challenge. And then the second area that I think everyone is still, is just starting to wake up to and figure out is, there's been a lot of talk about IoT. People in the construction space, or architects, engineers, those sorts of folk, have been doing a lot of work with IoT and incorporating devices into buildings. But and that's gone actually really fantastically. And if I use the term the building as a device, I think there's been a lot of work done to make that more accessible and to expose it even to occupants of buildings as something that they can use and improve their occupancy experience. But connecting that to business processes definitely still, I think one of the challenges that the industry faces. Of course, by doing that, on the one hand, you get access to data, you improve the experience further because it's in a controlled and structured process, so that things become more consistent. And you also you get all the data, etc. But the problem is you expose yourself to your information technology systems to a lot more risk in terms of the limited security that a lot of IoT devices have. So yeah, lots of new things to go that have been uncovered that folk are now needing to go and address.
Well, in our survey, we found that, 81% of our respondents said they would be investing in new systems. Out of that, 42% were targeting collaboration tools, and 39% investing in improving your reporting. It sounds like a lot of what you're working with is on the reporting side. Is this people are having new requirements about this, or suddenly the reporting's more important? What do you think? What's the average company working with here?
So again, I think really interesting because there's a couple of things here that are pretty important. One is engaging better with tenants has been a key issue through this process. The need for managers of buildings to improve their communication with tenants. And also with investors. So you've set this situation where building managers and general partners are the middleman between tenants and investors, and trying to keep all of those folks informed with what's going on, particularly through the first 6 months of last year, was really challenging because things were changing quite rapidly. And I think a lot of what the industry has done, a lot of what we have done, has been focusing on helping that man in the middle work better with both investors and with tenants and occupiers. And then the second thing is really, about reporting. Like I said, a theme before COVID that really accelerated during COVID was was improving reporting and getting the reporting so that it was more timely and more succinct, but also really more relevant. So, one of the challenges for a lot of investors over time has been the fact that it's always been quite distant from the investor to the actual asset, what's really going on with occupancy, cash flows, all that sort of stuff. And the risks that COVID brought up really meant that investors wanted to know more. So yes, improved reporting has definitely been one of the things that we've been working on for a lot of clients.
Thanks, Bernie. Another question I had was about there's some shift in perception in terms of how people see Asia comparing to the West. Now, when we worked together on the survey in 2017, 56% of the respondents to our survey said that they saw Asia trailing the West in terms of adopting technology in the real estate industry. Now, in this year's survey, only 35% saw Asia as trailing the West. And 30% actually said that they saw Asia leading the way. So is this Asian nationalism rising up, or is this really, are companies getting more online here in the region?
Yeah, I think it's really interesting because I would agree that historically, I think Asia has been a bit of a laggard, not necessarily for wanting to try, but generally the conservatism and risk averse culture has been very much around let's see how it works elsewhere, and if it works well, then we'll go do that. So a little bit behind, but I think one of the things we've seen is that certainly a number of markets have really for some time now had a focus on innovation and encouraging innovation, both in the private sector and from government initiatives that are focused on helping industries innovate. And some of that has come through to the real estate industry, and we're seeing a lot more I guess initiatives in the space. And I think the other thing that's changed is that the adoption of the personal adoption of the use of mobiles and apps and platforms that do things, the whole convenience piece has really grown significantly in the last 3-4 years, and and operating systems and apps have gotten better at doing that stuff. So there's been a growing expectation that this should happen. I should be able to do this, and not just as an individual consumer, but in terms of running my business. And there's another factor also, which has been, I think we're seeing certainly in some markets in Asia, a generational change in management, and where some of the founders are stepping back and younger generations coming in. And those folks have got a very different view in terms of use of technology and an expectation of an improved experience and an improved reporting and an ability to execute. So I think that's all contributed to significant advancements. If you look at other data we've seen from other sources, says that the investment in PropTech in particular has been strongest in this region. And I think that's for a reason. It's to do with the fact that there's a real appetite now to move forward. And I think COVID's accelerated that even further.
One area where we saw some very strong shift towards technology adoption really was in mainland China. And on the other hand, Hong Kong was really less aggressive about taking on new technologies. Having worked in mainland China for a long time myself, I understand that if you're a Shanghai-based company and you have properties in Chengdu and Beijing and in Shenzhen, there are issues of scale, there are issues of accessibility. How big of a factor is the scale of companies in terms of driving system adoption?
Yeah, I think you're right. One of the issues, obviously in Hong Kong, if you've got a portfolio of 100 buildings in Hong Kong, none of them are more than an hour away, right? It's a different context to, as you said, if you've got 100 buildings in China, they could be a 4-hour flight away, right? So it's a very different context and needs a different approach. And the other thing I'd say, particularly about adoption in China, Michael, is if we go back to that, what I talked about earlier about information technology, business process versus operational technology, IoT, etc. One of the things I'd certainly say has had a different attitude to it in China in particular has been that attitude towards those two things being connected. There's been far less fear, concern, etc., around the risks associated with doing that, and really much more a desire to actually want to do it and to get the benefits from doing it, and figure out the risks as you go along. So that's really one of the key things I think that we see in China in particular, where there is an expectation that IoT that the architects have been asking to be incorporated into buildings, and investors are suggesting should be incorporated, is that flows through and delivers benefits to occupants much more seamlessly than in other markets. And there's been quite a level of motivation to go do that. And I also think that, yeah, as you said, that remoteness or dispersed portfolio means that because it's a 4-hour flight away, yeah, I need to be able to connect to that building virtually rather than physically and get the data that I need. So yes, it's a different approach.
Interesting. Looking towards the future, in our study, we did ask people what they see as really the next big thing in technology. So what's going to be the biggest change that people are going to be adopting in the next 5 years? And 55% of our respondents pointed to big data. 42% looked at AI, which, and at the same time, you and I are talking about, how do people get out of spreadsheets? Well, there seems to be a bit of a hurdle between, gee, I've got everything in Excel, to, gee, I'm using world-class analytic tools. So do you agree with that big data is the next big thing for real estate world, or are there some intermediate steps in between?
Look, I think it's a bit of a both and situation. I think there are definitely some challenges in that aspiration. If you think about the concept of saying, well, we're going to connect all of our consumers, users of our space, to data and the ability to make things happen in terms of requesting things, asking for things, etc. You need the back end in terms of business process and operational process to actually make that happen, so that when things get requested, they get actioned on effectively in a controlled and predictable way with certainty of what the outcome will be, i.e. good business processes properly automated. So there is the need, I think, really what one of the areas that people are just starting to understand is that if you want to build that management dashboard, and if you want to connect those consumers to your building, you actually need to build a strong foundation in terms of IT. It's just like building. If you don't have a strong foundation, the roof won't stay up. So when I talk to senior management who say they want to select a dashboarding tool for senior management, but they don't want to address the underlying issues in the weaknesses of multiple systems running different business processes that don't talk to each other. So they want to build the roof before they've even designed the foundation. And this is exactly the same. It's a case you really need to get the foundation right. Otherwise, it'll still be garbage. Right? It might look nice, it might be easy to access, but it'll still be garbage because you haven't fixed the underlying problems with the data. Right? So AI, big data, definitely will happen, and they'll be used. But it's a much bigger task than a lot of people think it is. I think there's been some recent case studies on some of that with a couple of organisations who've exposed what they've achieved to date, and it's really shown that it is a much bigger task than most people think it is. And similarly, as I said, that connecting to IoT and the real, I guess, championing of that within China has been incredibly interesting, and exposed some challenges when you start to connect WeChat to your building. The inherent security weaknesses that you expose are quite significant, and something that people are starting to learn about and figure out, what do I have to do to deal with that? So yeah, I do think all of these things will come. I think quite a few of them will come sooner than people think they will. Some of them naturally will take much longer, but nonetheless, there's going to be quite a bit of change coming up very soon.
All right, well, we've got time for one last question before we join our on our friends from Hines. So it's now 2020 is over. It's now 2021. Vaccines are on the way. Do you see people continuing on with their shift towards innovation, their shift towards taking their real estate businesses online, or is this going to fade a bit with as the pandemic recedes? What do you expect?
Oh, look, I think this is definitely something that's going to go on for longer. I think people have, as I said, people have lifted up the rug, they've opened the box, they've found out what's inside, and they've realized that they've really got, excuse me, not just a lot of things to fix, but a lot of opportunities that they can take advantage of. And at the same time, I think senior management have realized that improved information, better flows of information, improved business process, improved connectivity between consumers, the building, and the ERP are all things that are going to be of benefit. And we've seen how some of those things have actually been adopted quite quickly, and they may not have been adopted as quickly had it not been for COVID. It may have taken 5 or 10 more years, but it took less than 12 months for some of these things to be adopted. And now I think there's an expectation that we should continue with that. Certainly from a consumer experience, an occupant experience, is like, well, yeah, I've got that now. It's good. It works for me. Whether it's around reserving desks that are properly spaced, or whether it's around ordering stuff that gets delivered touchlessly, whatever. There's a whole bunch of things that people now have that I see them not wanting to give up.
All right. Well, this is some things to look forward to for 2021. We will be working together on another edition of the survey later this year, so we can check out some of your ideas on this and see what happens in the next year. So thanks very much for joining us. We will have Bernie back in about half an hour for our Q&A session. So thanks to all of you. Now I'm going to bring in our guests, Claire Cormier-Tilke and Charlie Kunst from Hines. Now, having been a longtime resident of Jing'an District in Shanghai, I was always walking down the street to One Museum Place. I'd lived right at Beijing Lu and Tongren Lu, and it was just a couple blocks from One Museum Place. So I saw this thing from, I think, when you bought the site in 2013, and yeah, it was finished a few years ago, and it's all pretty much filled up now. My friend Josh has been leasing that building out all over the place. So it's good to have a chance to have all of you online. So Claire, you're with us there in Hong Kong, is that correct?
Yes, coming live from Hong Kong.
And can you tell us a little bit about yourself? What do you do at Hines? I can't remember.
Sure. Well, first, thanks for having me, Michael. I'm based here in Hong Kong, and I focus on acquisitions, development, and growth within Greater China. We have a particular focus on what we call China Silicon Valley here in the Greater Bay Area, so on both sides of the border. And then I support our efforts across the region of new business development and how we expand and bring all of these other pieces of Hines that have incredible depth around the globe over to this tremendous Asia expansion.
Great. And Charlie, you're joining us from Houston today. Can you introduce yourself a little bit?
Certainly. So thank you for having me. Very excited to be here. I'm in Houston, Texas, and about 4 years ago, I started our innovation office within Hines, and for about 10 years before that, I was doing acquisitions and development in the Bay Area for Hines. And over the last few years, I've really been focusing on deploying capital into venture capital funds and directly into technology companies, as well as starting new services and really trying to connect the dots of all the creativity and innovation that occurs at Hines globally, so that all of our folks around the world have access to that creativity that our company already has, and just doing everything that our team can to support folks like Claire.
Great. Well, now I interviewed Charlie as part of the research for our report, and I was very interested in some of the things that Hines is developing and operating buildings globally. And I really learned quite a bit about how working with tenants has influenced the way that Hines designs their buildings, and how those changing tenant expectations is influencing the way that projects are designed and developed. So I wanted to get a chance to talk with them about their perspective on tech adoption and how it differs across some of the markets where Hines operates. Claire, I guess with you being based here in the region, how do you see tenant expectations in Asia as being different or much the same as they are in the US?
Yeah, we're fortunate to have this broad feedback loop because we're interacting with the tenants as a landlord, but we also across the globe have a very broad property management business for third parties and even integrated facilities management where we are there deployed and nested within the teams of these large global corporations. And so when you think about what we're seeing from Asia that maybe is a little bit ahead of the rest of the world, it's we're in a bit of a time machine here because, first just from a hardware and software integration standpoint of the average just everyday person and their expectations in Asia, it's much higher. We've been a lot earlier to a lot of those technologies here in Asia, the capabilities of WeChat and Alipay and the sub stack within that is incredibly complex. And so what does that really mean? Well, it means that for our average tenant and our average user, they have really come up in a world where e-commerce penetration is growing at 25% in the China example. Or to use the Silicon Valley terminology, they're very used to speed and experiences that delight in their mobile device. And so they expect to be able to have that same speed and that instant connectivity, instant delivery, because that really has dominated their existence over the last 5-10 years in so many of these markets. Additionally, even just looking at Korea has 3.5 times the internet speed of global averages. And so again, it translates to not just the expectation of connectivity in the buildings, but also that translates into this conception around service and sort of a creep into how is the overall experience translate from the three-dimensional world to the two-dimensional world and everything about the way they're working. I'd say the final point that we see a lot of is this concept around the actual the user interface of technology and the user interface of a building. And so what we've seen here in Asia with, that's been accelerated by QR scanning, QR code scanning into buildings, or an entry experience that includes both a human experience, an interaction, and a technological interaction that's moved over to the West for sure and has been accelerated by COVID, but is very much part of the DNA here in Asia. And so tenants expect it, and so it certainly continues to push us.
Great. Well, now Hines acquired the site from One Museum Place in 2013. I think it was around 2014, 2015 that the tower started coming together. And now that was about the same time that I believe the company started work on Salesforce Tower, which stands out on the San Francisco skyline there. So when the company began work on these two towers, was there an idea that the requirements for the two buildings were quite distinct, or were they more in parallel? What were some differences in the way that those projects were designed? They're both very much trophy projects.
Yeah, it's a great question, and I think really at its core is the fact that we are a global company has allowed us to really compare a lot of notes as it relates to preferences and priorities. And we have a team within Hines called Conceptual Construction. And conceptual construction helps many of our projects around the world with all design and pre-development work. Everything from helping identify the right architect, to supporting the team kind of through the process, to buying the construction. And Jerry Hines, our founder, started that team because he realized that early on within Hines, we were making the same mistake over and over, and there wasn't really a centralized place where we could really keep our findings. And as our company grew and stepped outside of the United States, we were constantly iterating, particularly on Office, on our floor plates and on the best core and shell delivery we could create to make our spaces as flexible and as attractive as possible to our tenants. And there are certain things that we found that are actually universal. And so while One Museum Place was being designed, so is Salesforce Tower in our office in San Francisco, and we were working on that project every day. And the things that we really honed in on that conceptual construction encouraged us to deliver upon, as well as at One Museum Place, were the depth from the core of the building to the glass, the distancing between the columns, the floor to ceiling glass view to maximize natural light coming into the space. A raised floor system, which isn't necessarily universal, but in a lot of trophy markets where that kind of a product can be understood, it's great to be able to have your air and your data and your power and everything beneath the floor so that you can open up the space above your head a lot easier. And so those things we've actually been able to deliver in various markets, because the manner upon which people want to design and work is not necessarily fundamentally different geographically. And so we're able to kind of deliver that consistent core and shell, but there certainly are some differences that I'll let Claire touch on.
Sure,
So
I think.
Go ahead.
Oh no, I was
Go
just
ahead.
going to say, looking at first just not only how much technology adoption changed within that window, but also looking at where we are today and where it's going. I think this is where we look at the PropTech angle as both offensive and defensive. And so, in the 1.5 million or so square feet that make up One Museum Place and its podium, we have built and are building buildings like that all over the world. But as an example there, thinking ahead and knowing that the interaction between the podium users, the potential consumers who would be exiting the metro station that was under One Museum Place, and then how they would ultimately interact with the office building, we knew that that would be deeply technologically enabled, because that was just the direction that China was going. And so, our teams were working very early on, how would WeChat integrate into the experience overall? So not only for users in the building to understand where they were, and for security purposes, how they could scan in more quickly, but also how to market the building. There are 14,000 followers of the building on WeChat, and it's also something that can be used for point of sales. And so there we were starting and thinking about technologies on how to integrate that point of sale data capture to allow users to, for example, earn points towards credits that could be used to offset parking or to win prizes, to interact with asset management in a new and interesting way. And when you can integrate that into the physical design, into the asset management, long-term planning, it's really something that's an advantage. And so we certainly have tried to impart that, and we take pieces of that into the other buildings that we do today. But it's great. You sort of get this look ahead at where things are going and how we can share that across the globe.
When we spoke earlier, you mentioned about some of the kind of smartphone-friendly features that One Museum Place has. And it's pretty well-known fact that Asia has generally higher smartphone penetration than in the West, and smartphones are used for a wider range of applications than they are in Western countries often. So has this been useful in terms of the pandemic, in terms of dealing with the kind of 2020 and 2021 challenges that people are facing? I guess you've got QR sign-in at One Museum Place. In terms of tracking where people are, how they're using the building, has that been useful in this context?
Oh, absolutely. And at the very start of the pandemic, we were so fortunate because the majority of our engineering team and property management team has been with us even predating SARS. And so not only were they bringing to bear, a lot of the building and physical experience of having weathered those challenges and thinking about what they wish they could have had at the time, but then now there's technology that's progressed, and we had all of these tools to be able to put it to work. And so the QR scanning is a great example because it has COVID benefits, but also just bigger benefits for the building. And so upon entry, we're able to use smartphones to first do building check-in. So that can create, a safe and social distance to the ground personnel. But we're able to have pre-clearance of the person's name and background as they're entering the building. So we're able to use that for safety checks and wellness checks for COVID. But even in a non-COVID time, we see that as a huge benefit to the user, to the tenant that has invited them, and then ultimately to us as a landlord, it helps us improve the asset management. So from a user perspective, it keeps them from having to queue very close together and then interact with a person too closely to be able to get their information. So for example, exchanging cards physically. And then for elevator capacity, we know as someone is moving through the system so that we aren't creating crowds, how they can move upstairs efficiently. And so as a landlord and helping people feel safe, that's very important. But this is great for COVID and has been a key part of helping everybody to be safe. But stepping back and thinking about it from those three different perspectives, it's a huge value add. It allows us to, by using technology, to take the ground team, the property management team, and ensure they're at those high value uses. So ensuring that people feel that they're having a great experience or can have easy wayfinding or have that higher touch sort of luxurious entry experience. And then also just to give the efficiency for returners, for first-time visitors, and give the asset management touch that ultimately helps the building outperform.
All right. Well, that's an interesting angle on One Museum Place I hadn't thought of. One sort of feature of the building and of some of the other projects that Hines has in the region that is really a technical aspect that doesn't sort of fit into the business process or app concept as much as the air quality monitoring and the air quality controls that have been put in. And this is to my mind, if I'm an occupier, it's about ensuring the safety of my team. It's also a marketing advantage potentially. Like if you're working in our building, you are guaranteed a certain level of safety. But maybe you can tell us a bit about how, is this something that's unique to Shanghai or unique to China in terms of controlling the air quality in the buildings? So Charlie, I guess you've worked on this globally. Sorry, we're not. You're muted there, Charlie.
Thank you.
Right.
I wouldn't say that it's unique to Shanghai. What I would say is that I think that the West is learning a lot from watching Shanghai and other markets in Asia be so proactive about wanting information about the air quality inside the building. It's a place that I think is lagging pretty significantly in the West, and we're learning a lot. Specifically, I think that the certification standard of reset, having started in Shanghai and working its way from there, is something that across Hines we're looking at. I think that the ability to somehow truly standardize and measure and deliver information about the air quality in your building is something that all landlords should be taking very seriously, regardless of where you live. And so that was very specific for One Museum Place as it relates to reset and their forward thinking and really pressing to want to make sure that all this information was not only available to everyone in the building, but that it was delivered in the best way possible to maximize and improve the indoor air quality as much as possible. But the manner upon which you do that is very different from place to place. So if we go back to our previous example of Salesforce Tower, that's an environment actually where you're trying to bring the outside air in as much as possible, and you're trying to take advantage of the relatively consistent and cool climate. And so there are and what that allows you to do is dramatically drive down the energy consumption in the building, because you're taking better advantage of the outside air and bringing it in. And so there's very different ways to try to, depending upon geography and climate and a number of other elements, to make sure that indoor air quality is being maximized. But I definitely think that particularly the way that the information is shared with the occupants in a really proactive way, that's something that we're learning a lot from our colleagues over in Asia.
Mm-hmm.
So Claire,
yeah, Charlie makes a great point. Yeah, on the outdoor air versus indoor air. I think we'll unfortunately see more of this, but part of Asia, it's an everyday part of our existence, waking up and checking to see what outdoor, what the air readings are, and that'll determine, will we exercise outside or how will we plan our day to some degree. And so, from a building systems point of view, just more operationally, within our newer buildings, we do here in Asia, we do have electronic air filtering systems to filter out PM 2.5 microbial dust. And so, in that one Museum Place example, we're able to filter out 75 to 80% of that dust right at point of entry. But as Charlie said, bringing it back to sort of a prop tech angle, and what we're seeing is just that the average users crave for that data. And so having indoor air quality readouts, or more attention to wellness within the building in a way that can be consumed in a data format is very interesting. And I think there are things that will continue to push this boundary as wearables become more popular and step tracking. We might start to see ways that, whether it's in commercial buildings, in traditional retail, residential, or even logistics, that things like meeting your steps or how many steps it might be across different parts of the building might be ways to sort of gamify the space and interact with data as well.
All right, well, we've got time. I want to speak a little bit about the importance of working with tech tenants. This was one of the issues that came up when I talked with Charlie for the report about how working with tech tenants had influenced the way that that Hines designs their buildings, and also working towards what could become an OS for buildings. And I know that, well, obviously the Salesforce Tower is largely leased to Salesforce there in San Francisco, that Hines has worked with Microsoft, with other major tech companies around the world and around the US. How are these companies giving you requirements that are changing the way that you incorporate technology in your buildings?
Sure. So here in Asia, looking across between North Asia, China, Australia, or even over to India, we have a ton of these very new economy tenants. So headquarters for Uber, for Apple, Farfetch, and then also really these innovation leading sides for things like Walmart or other companies like them. And so we find that first they're pushing us in a few different ways. One, their own operations tend to be a step ahead of the rest of the world. They're out here experimenting and really pushing the boundaries. And so the way that they're touching, for example, omni-channel distribution is tremendously modern. And so finding ways to ensure that the buildings physically meet those needs and can interact with the technologies that they need and that they expect. And so in a real-time example, in Australia, we've brought over a product type we call T3, and it's Timber Office and a focus on Creative Office. And Creative Office is very advanced in the U.S. and perhaps just filtering its way over to Asia. But that started because these tech tenants in the Silicon Valley had these big campuses that felt like college campuses where people could interact and cluster and move around, creating effectively. And then throughout the U.S., people liked older buildings, older 1930s, 40s warehouse buildings that gave that tech feel. So in bringing that over to this part of the world, we first looked at what was that experience that those tech tenants were trying to recreate. They were trying to de-silo their teams and have folks move around. Well, that creates a tremendous tech need for the building itself. They need to have high connectivity to be able to work in different clusters around their space, in the way that they interact with their floor plate. They have a higher expectation for call it interconnectivity flow, and we think this will only increase. We know this will only increase, but between workers who are on site and those who may be working from home or working from remote locations. And so that sets a higher expectation. And then also just the way that they are using the buildings and expecting to really interact with asset management or this experience of blur of work and life throughout the day. And so this has pulled us into things like more active pop-up shop experiences or interactive and precise marketing around events with the building as we really tailor to their needs.
Okay. I think we are just about at the hour here, so it's time to start our Q&A session, if that's all right. Thanks for sharing with us about Hines projects. Let's see if our tech team can bring Bernie back into the frame for us. Bernie, are you out there? Are you ready for us? Okay, so we've got a lot of questions stacked up from our audience out there who were kind enough to stay with us through our technical difficulties earlier in the show. And let's see, I see the top question here is about the growth of technology and really about ROI. So I guess probably we'll start with the team from Hines. So adopting these new technologies, is this something that you simply do for the greater good, or is there some return on investment on these adopting these new technologies?
We definitely see it as a critical part of the investment, and back to that part of being, on the offense and the defense. So using logistics as an example, so in southern China, we moved heavily into the logistics space and cold storage. And as we're building out what we think the concept of a cold storage campus, that interconnectivity is a critical part of the building remaining relevant. So it's not just power capacity to be able to maintain cold storage on the site. It's power capacity to also be prepared so that tenants can, in their own user space, interact with things like robotics for pick and pack and more enhanced warehouse management softwares to run their business. These are really important, and ultimately they differentiate your building and your asset. We're doing the very same thing in Japan, where we realize that having higher voltage, and in this case 10x voltage compared to comparable sites, allows a user to have robotics preparedness, increased connectivity preparedness, where when they're planning for the long term, it's a site that they'll ultimately want to choose. And we think that translates to not only the stickiness of tenants, but the rents that we're able to command.
The only thing I'll add to that quickly, if I could, is that, in order to really understand the ROI for technology, you have to try it. And so I think there's a very important kind of research and development and piloting that's necessary to actually get to the bottom of the ROI. And the trick in doing that, or the challenge in doing that, is how can you try these new tools? How can you try to find the ROI and somehow, insulate it from, if it fails, creating larger issues or challenges in a building. And so what we're working very diligently on is a thoughtful way to have a pretty thorough pipeline of R&D, and to find places either in a tenant partnership or in space that we own and manage, like our flex office and co-working product, to actually try these tools um, and justify the ROI, or realize that it's not there, because there is a pretty significant chicken or egg issue here, where it's hard to really understand if the ROI is there before you try it and actually see it yourself. And so I think that, figuring out ways to pilot and do R&D in those areas that interest you in a way that can still insulate its failure from your broader kind of real estate portfolio or building is pretty critical.
Very helpful. And Bernie, I guess, well, where Claire and Charlie are working more in terms on the design of the building side and actually implementing these projects, your work is really more around helping companies get their business processes online. So are they seeing some return on that type of investment, or is that simply just gets them better reporting? How does that typically work?
Yeah, so actually, I'll also add to Charlie and Claire's answer real quick, if that's okay. The one of the things that we certainly see, and I've certainly seen over the years in terms of investing in operational tech, and that whole building automation process has been, really understanding who benefits from that sort of investment and what's the value of the benefit. And as Charlie said, some of it is so new that you really do have to go and try it and figure it out and realize that perhaps the person who the group that you thought was going to benefit is not really the primary beneficiary or the person who sees the most value. It can often be quite different. That's one of the real challenges that a lot of startups in prop tech face. To your question to me, Michael, in terms of business process, I think the difference again is that a lot of that stuff that's in the building, that's associated with the building and what it delivers to consumers, is overseen by investment managers who thoroughly understand ROI and a business case and want to see a piece of a spreadsheet that says here's the return on investment. Whereas when it comes to automating business process, that's typically more of a back office thing and initiative. And some organizations, quite rightly, really look for a strong benefits case in doing that, whether it's through efficiency, risk reduction, improved tenant retention, improved revenue, those sorts of things. Some organizations still see it as a sunk cost and don't really understand the fact that by improving their business process, they achieve those sorts of benefits, i.e. improved revenue, improved tenant retention, faster times to cash, and reducing risk and those sorts of things. So they struggle to put that benefits case together, but we are seeing that change to some extent.
And we have a question coming in pointed at Claire that says, Claire, as you're based in Asia, let's see if the team can bring this one up online. So this is, all right, that one there. Let's see, Claire, as you're based in Asia, has there been anything from working with companies here in the region that has been surprising? I guess from the technical aspect, are requirements from companies Asian-based companies different than requirements from occupiers in the US?
So it's maybe not a huge surprise per se, but one that is notable is from the point of integration of just mobile connectivity and WeChat or WhatsApp. It is a much higher touch tech experience between the asset management team and a broader base of the tenants than we had maybe seen in the U.S. and definitely in Europe. And this we'll get there, but probably a real example would be with tenants. You do feel a difference between tenants that have a large real estate department or a real estate division of their own, whether they're a bank or a car company or any, making widgets, versus those that are sort of smaller startups and maybe their building needs are met by just one person assigned within perhaps people resources or human resources. But when you open up an interaction set within WeChat or text, or WhatsApp, it really broadens and democratizes that interface. And so certainly that means that there needs to be a higher touch view from the landlord. But from the user perspective, it also means that people feel a bit more committed to their space. So the upside is that things like pop-up experiences or place-making efforts, local events, volunteer experiences, or something that can make a building more social. And again, not just on the office side, this is something that can be expanded across resi, again, or even logistics campuses. That's a much more rich opportunity set. So very different from elsewhere in the world. It'll get there over time, but certainly something where there's a lot to unpack.
Let's see. I've got a question from Ben about COVID-19. So this is very timely and on the topic for our study. So how has COVID-19? Let's see if the team can bring this up online. There we go. All right. So how has COVID-19 changed the way that companies are managing their buildings? Let's say. Charlie, why don't we start with you? You haven't gotten to tee off any of these questions yet. So what do you see?
Sure. In terms of, I want to clarify the question. As companies are managing their buildings, meaning real estate companies managing their buildings, or occupiers and how they're managing their office space. Maybe I'll
if you're a developer managing a building on behalf of your occupiers, from your property management perspective or your facility management perspective, have there been any differences after the pandemic struck?
Yes, they've been pretty material, I think. I think that the manner upon which property management, really more than anything else, I think, have really just been I've really shouldered the burden and in kind of maximize the safety of people in build throughout this whole crisis. There have been a lot of folks with a number of jobs and roles who are trying to contribute, but really it's the people in the building trying to make the spaces kind of safer is really where I think a lot of this hits home. And clearly there's been a great deal of effort as it relates to cleanliness of surfaces, as it relates to drilling into new technologies to filter airflow and those kinds of things. The advancements, though, in that capacity has not quite been as substantial, I think, as we had hoped. And I think that there were a lot of folks out there, probably most, were looking for some kind of a silver bullet to solve the problem and to just make our spaces completely safe indoors. And that's just not fundamentally possible. Instead, what has happened is that we have very significantly increased the volume of airflow in spaces. We've paid a lot more attention to the amount of moisture that's in the air. We paid a lot more attention and dramatically increased the regularity upon which surfaces are cleaned. And it's really been an operational significant adjustment as opposed to identifying a specific tool or technology that solves the problem. And really in maximizing airflow and in increasing communication to our tenants and occupants, that's really been the way upon which we've made some changes. And it's also kind of nudged some technologies forward, particularly in the West, I would say. Some of this was already existing in Asia as it relates to access control, utilizing your phone to kind of get in and out of buildings, to minimize the number of things you need to touch as you come and go. As well as kind of just increasing service and communication to our tenants. And so I would say, from my perspective, those are the most significant ways that the industry is and the operations of buildings have changed, and I don't really see that going away.
Thank you. Bernie, maybe we could take this to you on a kind of asset management side in terms of you're working with people managing their portfolios. has there been a major impact in terms of what asset managers want in terms of, say, reporting out of their portfolios after the dawn of the pandemic?
Yeah, thanks, Michael. Absolutely. There's been some significant changes in that space. I think I mentioned earlier some of that, and it's really around the fact that asset managers and property managers have found themselves in the middle between these two groups of investors and tenants, and particularly in the first 6 months, the whole uncertainty that the pandemic caused in terms of, are we in the office, are we not in the office, is the office safe, is the office not safe, and shopping malls everywhere else. The whole question around, first of all, what's happening? So, are the tenants turning up? Are they going to pay their bills? Will we see rent or not? Lots of questions from owners and investors in terms of the health of the portfolio, the health of the tenants, and the health of the platform. And then on the other side, obviously, with tenants wanting to understand what they could use, what they couldn't use, when was the building last cleaned. So the need for more information and more communication is significant. We very quickly rolled out a tool that helped our clients better monitor requests for abatements, deferrals, and also collections. So to help our clients better manage that as different categories of tenants went through different phases of the initial pandemic impact. I think as a result, as I said before, there's definitely been a recognition that from a lot of organisations that there's a lot more they can do to improve their reporting, and it's actually possible to go do it. The tools are there.
All right, I think we're right at 11:15 there in Hong Kong, so I think we've gone a little bit over. I see a few more questions, but maybe we'll save that for our next PropTech show. We will be having some shows coming up later this year. Our next show is going to be in March. We will have a series of programs on redevelopment and value add strategies, which should be very pertinent for our developer friends. And in May, we will have another set of programs about multifamily investments, focusing on mainland China and Japan. And we'll altogether have 7 sets of shows this year after this one. So we'll have that information available on our website. For those of you tuned in late, we will have a recording of this show available on our website later today. And also the report will be available for download within an hour. So thanks to Bernie, to Claire, and to Charlie for joining us here today. You've all been great guests, and it's been a pleasure working with you.
Thanks for
Thanks
having
very
me.
much, Michael. Yeah.
All right.
Thanks
See
to the
you
team
next time.
for making it all happen.